Let's talk right now about taxes. What's going to happen to them? Matthew Lesh is a public policy fellow at the Institute of Economic Affairs, the free market think tank. Very good afternoon to you, Matthew.
Good afternoon.
Thanks so much for joining us. Lots of tax stories in the news today. One, of course, in the wake of that 51 billion, who knows how much it is today, apparently a black hole in the public finances that Rachel Reeves, the Chancellor, faces after a think tank sort of put the numbers together. Some of that is the lack of growth, some of that's the rise in interest, some of that is, costed in welfare costs and the like. But basically, she's got to fill that public black hole. How are we going to fill it? Well, the Prime Minister yesterday, Keir Starmer, after that news emerged, was asked about whether he stands by his manifesto pledges about not putting taxes up, the crucial tax rates up for people, working families. And he kind of seemed to not reiterate. It was very, very simple. No, of course we stand by our pledge. We will not put the rates of income tax, national insurance or VAT up. And he didn't do that. Is that telling? Should we expect some of those to go up at the autumn budget?
Look, here we are, the £50 billion question. At the moment, what the government's done is very much failed in what it was trying to do a year ago, which is it's both failed in achieving economic growth, but it's also failed with respect to keeping government spending under control. And you've seen the backlashes on the Labour backbenchers that have forced them to have these policy reversals that have now created this quite problematic fiscal situation for the government.
Well, it's quite a problematic fiscal situation for the taxpayer as well.
Well, indeed. And we already knew, of course, taxes were going up. Now they're going to have to go up even more. They were going up because they have the intention to keep thresholds frozen when it comes to income tax. That's not going to be enough to cover this. There are other levers that they can try to pull. So you hear a lot about, let's say, putting up taxes on pensions. But those are quite tricky. They discourage people from saving. They don't necessarily raise as much revenue. So some people are now turning around and these economics organisations saying what you need to do instead is put up those three main taxes the government is committed to not putting up. Now, look, I don't know what the government's going to land on this. I think it would be quite politically toxic. And I can say that because putting on the other hat I wear at Fresh West Strategy, we've been doing some polling recently asking people about whether or not they do want to see higher taxes in order to fund public services or whether they want lower taxes and they're willing to see some cuts to public services. And we've seen a real reversal, perhaps 5-10 years ago, in that kind of what was considered the Tory austerity era. The sense was, okay, well, maybe we should pay a bit more tax. That's not the sense today at all. You do get very big majorities, 60% of people or so will say, in fact, we want to see taxes go down, we want to see the government cut spending.
But also, even when the people say they do want taxes to go up, I remember it's extraordinary fact to discover that when Tony Blair put up, let's put a penny on national insurance to pay for the NHS, and it was a massively popular policy, and he got elected on it. People say, you see, people will vote for it. Turns out, in the focus groups, people thought they genuinely were paying each a penny more, not actually as a percentage of all of their income. They really did not realise they'd had a big tax hike. And again, a lot of people don't pay that much attention to their pay back until, of course, they go, hold on a minute, there's nothing left of it after the tax man's been there. But the reality is most people will say, oh, yes, you can put taxes up on those people over there, the wealthy, the big corporations. And they don't realise, A, there aren't enough wealthy people, and the ones who are very wealthy are going to be taxed more. They're already paying 30% of the taxes in this country. They will leave. We know they'll do that because that's what's happened in every country where they've done that, and it's already happening here. But also these big corporations, these big companies, most of them aren't big companies, and most people work for companies that aren't multinational corporations like Google or high street favourites who've got loads of money. And actually, a lot of those companies will end up going under, and actually that hurts working people. We're going to end up paying those extra taxes somehow.
Well, indeed, there isn't simply more revenue to get out of taxing top earners. At the moment, we already very much squeeze them. We have and this is something the Tories never really celebrated very much, but they created an extremely progressive tax system where the top 1% of earners are paying something like 40% of all tax, the top 10% about 60%. You tax those people more, you do discourage work, and you end up with a weaker economy. The only way to raise major pieces of revenue, and this is again why the government's ruling out, why they're having issues with ruling out these kind of tax rises, is to start taxing middle income earners. And I think you are right. In the past, people have seen, well, if we put up taxes, that's going to be somebody else paying. If you're on £50,000, it'll be someone on £60,000. If you're on £100,000, it'll be someone on £120,000 who's rich, and they're going to pay the taxes. The reality people are now discovering, as they are paying higher taxes, is that no, it's people who are working who are getting stung with these. Yeah,
and we are getting stung with. Working families are paying more tax. Families people who are on really average earnings now, or only slightly above average earnings, their top part of their income is being dragged into the higher rate of tax. So they're going up from 20% to 40%. They go, I've worked hard, I've got a promotion, I've got a pay rise. No, 40% of that plus national insurance insurance is going to the taxman. People start noticing that. That used to be a tax rate. It was, it's a higher rate. It's not the highest anymore, 45%, but it used to be a rate that, the bank manager would pay, not a teacher or a nurse or a police officer. And that's the big difference. Plus, not just the tax thresholds more and more being people dragged into it, but of course, we've got tax on energy, tax on petrol, fuel duty, and everything, and VAT. We pay more tax in VAT. The rate hasn't gone up, but when prices go up on everything, we do pay more tax.
Yeah, that's absolutely right. And then you get these kind of woo ideas about wealth taxes and about trying to find other ways to tax people because they don't want to start taxing people's incomes. And then we all know that those kind of the kind of things that will scare away wealth creators and investors and will shrink our economy. And again, this is where the government's really struggled here, of course, because they came in saying, we're just going to put up taxes here and there. It's only the wealthy that will pay. And now you've seen abolishing the non-dom rules means perhaps some wealthy people will leave the country and they're going to take their wealth and their investment with them elsewhere. You put up taxes on national insurance. It's actually been a massive issue. This is where the Bank of England is actually part of the reason why they're struggling today, is because you've seen a reduction in employment starting to come through, which is why we've seen this rate cut. We've seen kind of this weakening economy combined with talk about high minimum wage. You try to do all these other things because you don't want to put up taxes on income, and they also have other consequences.
And it's interesting, the Bank of England just had a press conference about their decision announced at 12 p.m. Obviously, of course, they're taking interest rates down to 4%, but they've now predicted their inflation forecast that it will peak at 4%. Now, again, that's, it's 2% is the target the Bank of England is supposed to have in terms of inflation. Okay, 4% isn't 11%, which we did have a couple of years ago. But again, we're going to have that 4% inflation on top of the last few years and the 11% we had. They haven't come down in the meantime. They're carrying on going up and people can feel it. Here's the other thing. Council tax is in the news as well. Lots of people have seen their council tax go up. That's a really big sort of lump sum that people see, they notice. They get that letter through the door and they'll do it at the same time as they know, I used to have weekly bin collections. Now it's every 3 weeks for some of my bins or every 2 weeks. There used to be a good leisure centre. That's been closed down. I used to get this or that. That's been closed down. The streets are dirty. The street lighting doesn't work. People can really feel that we're not getting a lot of the public services people feel they pay their council tax for. But now we're talking about council tax payments going up, particularly in people in wealthy areas, or though they may not necessarily be the wealthy people themselves, to pay for people in more deprived areas. Can you very quickly explain how that would work?
So the government's reconsidering how it distributes central government money to councils, and part of what they're doing, I suppose, is reasonable sense, which is they're doing this kind of needs-based assessment. There might be some areas in the Midlands or in the north in England that are a bit more needy than those in London and the South East. What they're also doing, though, which I think is quite interesting, is they're effectively punishing councils that have managed to keep their council rates low. So several councils in London, Wandsworth famously being Thatcher's favourite, but ones like Westminster or Camden, where they have successfully managed to keep costs relatively on the downside, and they haven't had to put up council rates as much. Now, under the new formula that the government's considering, they're going to effectively take that into account and say, well, you can put up your council rates for your residents, and instead we're going to use some central government money. And that could lead in some of the wealthier parts, considered to be wealthier parts of the country, councils facing up to 10 to 12% of funding cuts. You're seeing 186 councils, according to this analysis, losing a total of 2.1 billion in grants. So this is kind of a very Labour redistributive effort that basically seen areas that have been successful and saying, well, you don't deserve as much. Let's give it to different parts of the country.
I'm not sure people are going to be very pleased about that, but there we are. Given actually a huge amount of government money already paid in tax, which is progressive, goes already to councils. A lot of people, who've again worked hard, done well, perhaps had to save up for a huge mortgage in some parts of the country, particularly in London, are going to be even more fed up about that. Great to talk to you, Matthew Lesh. Thank you so much for going through some of that with us from the Institute of Economic Affairs. Benjamin Butterworth, we know you're somebody, one of those young people spent a long time trying to get on the housing ladder and all of that issue. We're going to be talking about rents in just a couple of moments as well. But council tax, all these taxes, it does eat into the money that people earn.
Yeah, I mean, there's an oddity here because actually home ownership is much higher in a place like Hartley-Brewer than it is a place like Camden if you're under 40, because the cost of the housing to your income is far more relative. And so the idea of what makes you wealthy is really not as linear as it once was.
Yeah, someone's got £1 million home. It's like it's a 3-bedroom tiny little house with a half a garden.
Yeah, back when I was renting a £1.2 million house, and people were like, wow. And I'm like, yeah, but that's just because it's not big, trust me. It's just because it's London.
Yeah.
And so, but what I would say is that the bit that no one mentions is demographics.
Yeah.
You know, when you're looking at public spending, the triple lock, this thing that gives pensions keep rising, is going to add £31 billion in the next 12 months. So at some point, if we're getting serious about all the public money going out, I'm sorry, but some of those people in very nice houses that are 70 and on their pension, I think they should actually not get so much public money.
Well, there we are.